Welcome back to the Trading Master 101 course. In this video, we're going to be doing candlestick charting time frames. In the previous videos, we've seen how to use the OHLC values to create individual candlesticks. But in this video, we're going to take candlesticks from one time frame and try to create a candlestick of another time frame. It's going to be fun and it's going to be easy. So in the meanwhile, let's subscribe to the channel and hit the alerts button so that every time there is a new video you will be alerted of it. So candlestick charts are basically a group of candlesticks that are bunched together and they are specific with a time frame. Now there are many kinds of time frames that are out there, and you can even generate your own time frames, but the most common ones are the M1, the M5, the M15, the M30. So basically the M stands for minute. So when you look at the M1, right, so each candle in that chart is going to give us the OHLC values for a past 1 minute. Each candle is going to be generated in every minute. So this is a pretty fast chart. The M5 again is going to be giving us the data for the past 5 minutes, and the past 15 minutes would be given on the M15. The M30 again is going to give us, it will give us the values for the past 30 minutes. Moving ahead, you have the H1 and the H4, which stand for hourly. H1 is for, each candlestick is for 1 hour. H4 means that each candlestick is going to be for 4 hours. And then the D1 stands for daily, and the W1 stands for the weekly. So each candle on the W1 chart is going to be representative of what happened to price over a 1 week period. Now I have the M1, M5, M15 and M30 in red, and I have the H1, H4, D1 and the W1 in green. The reason for this is that the M1, the M5, the M15, the ones in red basically, they're pretty fast time frames, and beginners shouldn't really be using this. If you are a beginner, you have very little knowledge, then I would suggest that you always avoid those until and unless you get very good at it, because even professional traders, full-time traders would want to avoid those time frames because at times it gives you the wrong signals. So always stick with the green ones, avoid the red. Moving ahead, we want to understand how these time frames actually work, and what I'm going to do is I'm going to take an example so that you have a very good idea how the independent time frames are working. We're going to take the M30 time frame for now, and the OHLC values are 30, 40, 20 and 35. Now in our previous lectures, we've seen how to create a candlestick based out of these OHLC values. If you haven't taken that video, or if you haven't viewed it, please go ahead and view that before proceeding further. So we have an opening price of 30 and we have a closing price of 35, which means that this is a green candle and it moves upwards in price. So let's put up our high at 40, let's put up our low at 20, and this is what our candle looks like. Now the very next candle in this chart is also going to be an M30 time frame candle, right? Because we're on the M30 chart. And assuming that the OHLC values are 35, 42, 25 and 39, we can go ahead and make the candlestick for this as well. I'm going to draw horizontal lines so it's a little easier for you to see where the opening and the closings are. We'll start at 35, it goes up, it's a green candle, closes at 39. The high is higher than the previous candle, which was at 40, because this one is at 42. And then we have a lower wick which pushes basically prices down to 25, and then prices move back upwards. So our 25 is lower than the 30 and above the 20. So this is what the second candle in the M30 time frame chart would look like. So now that we have two M30 candlesticks, we can create a H1 candlestick. Notice that 230 minutes makes 1 hour. So let's try to do this. The H1 time frame OHLC values are going to be 30, 42, 20 and 39. But before we proceed any further, I'd like you to know why we got these numbers and how did we get them. So these two candles, when they're combined, will end up making the H1 candlestick. So we're going to start with this one. At the very beginning, price opened at 30, and so we have an opening price of 30 in the H1 time frame candlestick. Now price goes up to 40 in this chart, so we could put a 40 here, but then we notice that the M30 candlestick that appeared after this one has a high that is 42. That's even higher than 40, so we're going to put in the highest one of these two. Similarly, we're going to use the lowest value amongst both of these candlesticks for the low of the H1 time frame. So this turns out to be 20, and then we have the closing price of the second candle, because the hour started around about here and it ended with this candle. So the closing price of 39 is going to be the closing price of the H1 time frame. Now we can start making the candlestick for the H1 time frame. So we have our body, it starts from 30, goes up to 39, and then we have the high at 42 and the low at 20. So what I want you to understand in this exercise is that when you have two candlesticks of the 30-minute time frame, you can end up making the H1 candlestick. Similarly, you can break up the 30-minute time frame into two 15 minutes or 6 5 minutes. Or you could have 30 candles of 1 minute that would actually be combined, and it'll give you this result right here. Now the advantage is that this candle, the H1 time frame, gives us a much more reliable view of where the market prices are going to go. However, there is a disadvantage of this as well. So moving over to the first candle that we made, here we can see that buyers are in control. Price moves upwards. There is a bit of a struggle between the buyers and the sellers, and there's always going to be that struggle. But at the end, buyers are in control and they drove prices upwards. Moving over to the H1 time frame, we see the same thing. Buyers are in control, price moves upwards, goes all the way to 42, it goes down to 20. But what we don't know is that what exactly happened within this time frame. So moving over to this candlestick, right, we're seeing that when price moves up and closes at 35, right, and this candle opens at 35, the sellers came back into the market and they pushed the price down to 25. Now the buyers were losing at this point, but then the buyers stepped in and they pushed the price back upwards. Now this is the advantage of moving to a smaller time frame. So this also falls under the multiple time frame analysis strategies. So we're going to look at the H1 time frame to make our trades. However, if you want more detail, and this is what advanced traders usually do, I don't want you to get into this right away. I'm just bringing this to your knowledge so that you have a good idea of how this works when we actually get into it. So this candlestick says buyers are in control. Here we can see that there was a struggle between the buyers and the sellers, but the buyers eventually succeeded. And even on this candle, the price moved upwards, which is why it is a green candle. So let's move ahead and try to do another example. On the screen you're going to see the two 30-minute time frame OHLC values, and you see the H1 time frame OHLC value. I want you to pause the video and try to make this and come back once you're done, because I want to see if you get it right, and if you have any problems you'll be able to see what mistakes you made. So let's proceed. The M30 time frame OHLC values given here say that the opening price was 30, price moves up to 35, it goes up to 40, and then the low is at 20. This is the same one that we did in the previous slide. Then we'll move over to the next one. Here price moves downwards. It goes from 35 to 28. The high is at 42 and the low is at 25. So we have a bearish candlestick here. Sellers are basically in control. Buyers did try to push the price upwards, but then eventually the sellers managed to pull the price downwards. So let's go ahead and make the H1 time frame. We have a very short body here. Price opens at 30, it goes down to 28. There is a huge upper wick which goes all the way up to 42, and the lower wick goes down to 20. So what we can see is the first candlestick on the M30 time frame, buyers are in control. The second one, buyers lost. So buyers, when it opened, they tried to push it all the way up. So price went up, but then sellers came in and the selling pressure was so high that it went all the way down. And at this point, some buyers did manage to push the price back upwards. So it didn't close at 25, it closed at 28. Looking at the H1 time frame, we know that buyers made a good attempt. But sellers pushed the prices downwards. The sellers are in control. So it's important to look at a number of different time frames. When you get a hang of this, it's going to be very easy for you, provided the basic information, this basic knowledge has been built in, right? So if you're accustomed to this, then later on it's going to be very easy for you. Now every candle represents a struggle between the buyers and the sellers. So what traders want to do is they want to be able to create a story. We've tried to show you the struggle between the buyers and the sellers in the live video that I presented right before this. And this is basically just a confirmation of what exactly is happening when the candlesticks are being made. This kind of analysis of price movements through the charts and candlesticks is called technical analysis. Now, this is basically the beginning of technical analysis that we're going through. There is a lot more to this, but these are small steps that we're taking, and by the end of this course you should be able to get a very good feel of where exactly you're going and what you can possibly end up achieving. Now, I'm leaving you with an assignment. I want you to go out, try to find some candlesticks on Google or anywhere, and try to come up with a story. What are the buyers and the sellers up to? When are the prices going up? Where are they going down? Try to create a story, and if you have any problems or any questions, feel free to message me in the comments section below. So when you look at candlestick charts, you will find a number of candlesticks that look pretty much similar to each other. And over time, people have actually named these candlesticks. Now there are a lot of candlesticks, but I'm not going to cover them all. In the next section, I'm going to tell you about the ones that I think are important for you to know so that you are able to make good and consistent profits.